Good afternoon, everybody. Thanks for joining us. And you'll be, as you filter in, you'll see a polling question up on the screen. So please feel free to answer that question as we get settled in here to talk about economic recovery and BIPOC small businesses in California. We look forward to starting this conversation in a few minutes. Great, thank you. So you, just so you know, there's the chat function as well as the Q&A function. As we go through the webinar today, you'll have access to both. And I'm just seeing that Tate Hill was denied a vote, so we'll have to fix that. So make sure that you use both. We'd love to hear. I know the panelists really like to read the chats as they're speaking, and other participants in the webinar also. And the Q&A is also the place where you can ask your questions, and I'll be going through those questions at the end of our presentation, and we can have the panelists answer the questions when we get to that portion of the agenda. Thank you, Heidi. So panelists don't get to vote, but we'll definitely be hearing from Tate and all that he has to share with us and all the panelists today. Yes, and please introduce yourself on the chat. We'd love to hear who's here today, so you can share your name and organization and where you're joining us from. That would be wonderful. We'll just wait a couple more minutes before we get started. Again, my name is Paulina Gonzalez-Brito. I'm the Executive Director of the California Reinvestment Coalition, and we're joined by some change makers from across the state, and we're excited to hear from them today and to introduce you to them in a couple minutes. Right. So you see the polling question there. Do you think there should be a second round of targeted forgivable PPP loans for underserved small businesses? There's a lot of talk in DC now about what a new stimulus package should look like. A lot of talk, very little action, but we'll see if, you know, there should, you know, whether we see any more PPP loans that get distributed, or any kind of relief for small businesses coming out of the stimulus package that gets put forth. And we hope that we can, with your help, craft those to better serve the small businesses that have been excluded in the past. And so with that, we see that you all really want to see more support for small businesses coming out of the federal government. And hopefully we can do that work with you. So I'm going to close this poll for now, and we're going to get going here. Thank you for your participation in that. I think I shared it. I don't think I've ever done a poll before, so hopefully it did that right. And you can see the poll results there on your screen. Okay, so thank you. Again, I'm Paulina Gonzalez-Brito with the California Reinvestment Coalition. And you're here to hear from our panelists, and we also want to hear from you today. So please use the chat function and the question and answers to ask any questions of our panelists. I'm going to do some Zoom keeping. If we can go to the next slide. Great. So just to let you know, the webinar is being recorded. And so we will be sharing the slide deck with you and the recording if you'd like to rewatch it or share it with your networks that is something that will be made available to you. My colleague, Patty Senor, who some of you know, or many of you know, will be sharing resources on the chat with additional links that could be helpful for you as you follow along in the conversation. So please keep an eye out for those. And as I mentioned earlier, submit questions via the Q&A function. That will be something that we will be going through at the end of the agenda. And so with that, let's go ahead and move to the next slide, and so we can see who's joining us today. So we are excited to have these panelists with us today, Tate Hill, Maribel Garcia, Trevor Parham, and Ron Fong, who are with us today to talk about the work they're doing across the state of California and in their communities. They're change makers working with micro enterprises and small businesses across the state. And so we look forward to hearing from them and the great work that they're doing today. And so we look forward to that conversation and having you talk with them and ask your questions of them at the end of the agenda today. So what will happen is we'll hear from each of them. I'll ask some questions of them to get the conversation going, and then we'll leave about 30 minutes at the end for you to ask your questions. So thank you. And then next slide, please. Okay, so I just want to say a few words about the conversation today before I turn it over to Tate to begin his remarks. So we know that COVID is threatening small businesses across the country, that especially Black and Latino and other small businesses owned by people of color have been the hardest hit. It's not just a health issue, it's an economic issue that's impacting our communities the most. It's CRC's position that this is not an accident, it's actually by design. Our country was founded on the original sin of genocide of Indigenous people and the enslavement of Black people. And white supremacy and anti-Blackness is baked into the DNA of all institutions which have been born from this country, starting with government, schools, philanthropy, employers, and yes, banking and our financial system. So working at the intersection of economic and racial justice, like our panelists do, is about the undoing of white supremacy and anti-Blackness within the financial system, sometimes by cleaning up the banks and financial system and that the work they're doing every day from within that system, and other times by building alternatives to the financial structures themselves. So I just want to center us in what is anti-Blackness? It is the structures, practices, policies, and ideologies that allow for the devaluation of Black life and that predetermine the socioeconomic status of Black people in this country. It impacts Black people most deeply, but also all people of color. So today we will be talking about the ways in which small businesses owned by Black, Indigenous, and people of color have been systematically excluded from the financial system, predetermining the socioeconomic status of BIPOC communities. And you will be hearing from our panels today about the innovative ways in which they are working to build new systems to address these historical disparities. So thank you, and without further delay, I'll turn it over to Tate Hill to get started.
So thank you, Paulina, and thank you to CRC for hosting this webinar on today and always being at the forefront of racial equity within the state of California. I have the fortunate pleasure of leading an organization in Central California, Access Plus Capital. We are a small business lender with the focus of supporting small businesses in Central California and underserved communities. And so if you go to the next slide, just gives a little bit of highlights of our organization. We've been around since actually we started in the 90s as a program of our parent organization, Fresno Economic Opportunities Commission. We're a subsidiary of a community action agency that was born out of the war on poverty movement here in the United States. And we started as a program to support Southeast Asian businesses, business owners and farmers who were refugees coming into Central California. And so over the last 10 years, we've been doing work as a CDFI, one of the few place-based CDFIs here in Central California. And while explicitly our mission statement is general to talking about underserved communities, in practice, what we have always endeavored to make sure that we were engaging the communities most underserved in our communities, and those being communities of color, of those that are small businesses as entrepreneurs and startups, and then particularly also as businesses in our rural communities. And so we have the opportunity to serve small businesses throughout Central California, from Kern up to San Joaquin and over to San Benito County. And we support a number of those businesses where there are limited banking resources. We've actually, in the last several years, have worked with CRC about the lack of banking opportunities and banking resources in many of our rural communities, and the disconnect that it creates for those rural businesses to have relationships and access to services. And so over the last 10 plus years, we've been working to support the small business growth within our region. And this year in 2020 was no different, but it really honed in on for the greater need for us to really think about how we provide services and how we engage our partners and other providers in those services. And so, as we began to do our work around providing support to businesses that were struggling, trying to map out this process of what COVID was going to mean for their business, for their livelihood, we continue to see the need for both capital and technical assistance. And so if you go to the next slide, just this whole concept of it's important for our communities to have access to capital, and that is within reach. But also, what we have found out with the work that we did in providing recovery services to our businesses is the need for technical assistance. We worked with both the city of Fresno and the county of Fresno to administer programs for forgivable loans and small business grants related to COVID. And we had to process just under about 5,000 applications, about 4,700 applications. A third of those applications, many of the businesses had difficulties completing them and submitting their application. And so we saw, just even with some of the basic components, the dire need for our communities, and particularly businesses in low-income communities and those owned by people of color, to have access to viable technical assistance in language, in their neighborhood, with individuals that they could trust, to provide them the resources they need so they could even access the capital that was available, whether it be through federal PPP, through state programs, through local municipalities and foundations. We found a number of our businesses had these challenges. And of course, this didn't just start at COVID. It didn't just start in March and April. And what we've been doing in the last couple of years is really looking at how can we make sure that we can reach as many businesses as possible, and really doing a purposeful dive of our data and information to say, okay, how can we have a further reach? If you go to the next slide. And so we started to look at some of the challenges that were happening within our larger community, but because of also through the recovery. And again, this just highlights some of the challenges that some of our businesses were having, but demonstrating also the dramatic need. There has been no slowdown and the amounts of requests from businesses. And we can still continue to do applications. I just got information from one of our staff. We had one of our record deployments of regular loans for the month of November. And so we see that there's a drastic need for capital for our businesses. And one of the ways we began to look at that earlier this year, you go to the next slide, was regarding our nano loan product. And we wanted to create a product that would be affordable for businesses, that would be flexible. We did some surveying through a project with Listen for Good that really challenged us to listen to our clients and our customers to find out what the needs and so forth that they had. And they said, you know, while you are flexible, you have some great products and services, there's some gaps. And we really looked at how could we deliver a product for many of our small businesses that might have challenges with credit, may not have sufficient collateral, but with good technical assistance and support, they are very viable candidates. And so we created the nano loan product, actually really around this time last year, and to really look at how could we provide a product that would provide capital and technical assistance in a way that's going to really help build the credit and the viability of that business. You know, how can we combat the temptation of high interest loans that promise short turnaround? And so we created a product that began to address that with the focus of saying, we know, and this is, you know, I think an important point for as we think about the recovery products and programs that are going forward now, is that it's not always about the fastest application. We needed to do some targeting and say, we recognize some of our communities, they have more challenges than others. And this particular product initially is piloting in Fresno's 5 most environmentally, economically impacted zip codes, which is primarily South Fresno area, with the intention to support those businesses. Many of them are low-income communities, a large concentration of entrepreneurs of color, and to really say, we want to have intentional impact in our community. And so actually, Brianna Knight is one of those first businesses to get that loan. She's been in business for several years. She was looking for ways to build her credit, to expand her business, and to take advantage of the technical assistance. And because we had funding and investment that allowed us that level of flexibility, we could create a product that would be able to support the needs of a business like Brianna.
Thank you, Tate. Is that your last slide?
I believe so.
Thank you, Tate. Adrian, can we go to the next slide? Thank you so much, Tate, for that insight. Especially great to hear from you about the innovative products that you're putting together, and the needs for inland and rural communities. So really appreciate that. And I want to introduce Maribel Garcia. She's a senior associate at Inclusive Action for the city. And so Maribel, I'll turn it over to you.
Thank you, Paulina, and thank you for having us. And thanks to everyone in the audience for joining us today. So Inclusive Action for the City. So we are a small microlender in Los Angeles. We can go to the next slide. And I'd like to introduce a little bit about what we do at Inclusive Action first. So we are a community development organization. And this year we did become a CDFI, but really I like to think of ourselves as like an advocacy and economic development organization. We really like to pair both to try to serve entrepreneurs that are the most excluded. We often like to say intentionally excluded. by a lot of the institutions and systems in place. Next slide. And one of our biggest advocacy efforts was our decades-long effort to legalize street vending via SB 946. But in those 10 years, what we really discovered is that we not only needed the advocacy, but it was very clear to us that we also needed access to capital. In working with street vendors, it was so clear that they are living in areas that have no access to any walkable banking institutions. What they're surrounded by is predatory lenders that take advantage of the fact that they have no access to any other capital. So what we did, next slide, was create our Semilla Fund, which is our microloan. So we designed a pilot program. It's small. So for us, we always hear that the $35,000 isn't a lot of money, but for a street vendor, it's actually huge. Most vendors, when they first come to us, actually request a $1,000 loan, sometimes $1,500, and usually they scale up as we assist them to formalize. So one of the things that we really like to do is work with them. We call it technical assistance, but we don't really have a definition for what it entails because it varies per person. So it could be as simple as like creating an email, or as formal as like going through permits and making sure to assist them through that process. The terms are 1 to 3 years, and we create an opportunity for a rebate. So there's timely repayment by the end of their loan. They're reimbursed a percentage, either 1 to 2%. And we really focus on micro businesses. So because this program is really the fruit of our efforts to support street vendors, we try to keep our loan portfolio at 50% street vending clients, but the remainder is really used to support other types of micro businesses or micro entrepreneurs that are looking to formalize. So that can also include and does include some brick and mortars that maybe don't have as much experience or just starting up. Next slide. So our program is fairly successful. We are one of it's like a smaller lender, but we have deployed over 540,000 in capital. Our average loan size is 8,000, and for each entrepreneur, they're provided with assistance throughout that life of the loan. And historically, our default rate is less than 2%. So I think we have a pretty strong portfolio, but the reason I like to think that people continue to like come to us for support and really do repay their debt is for 2 reasons. And one, it is that they know they have someone to lean on to help them pivot, which became very clear in COVID or during this pandemic. But the other is there's nothing else around for them. Like all individuals have are predatory lenders. So our loan is not only flexible, it helps them grow, and it helps them grow their businesses in a very healthy way. Next slide. So one of the things that we know very clearly is that in order to serve more people, we can't do it alone. So we work in coalition with other organizations and try to create an ecosystem where we can support one another. One of the things that we do is if someone comes to us and is a strong borrower, has a 700 FICO score, we refer them to someone that can take their loan. And we try to save our capital for those that are really unable to secure capital otherwise. And we try to work with other agencies and try to make sure that we learn from each other, that we learn from each other's mistakes, that we grow together, that we advise each other as changes come. I know during this pandemic, we've leaned very heavily on other organizations to support one another and really help as many individuals as possible. And also to use all of those voices and use that to advance our policy work as well. The next slide. But yes, so one of the things that makes our work a little bit differently is that we try to make I know this presentation is rejecting me, is that we try to work alongside our clients, our entrepreneurs and our partners to really elevate their voices. And as we work with different organizations, we really try to see the differences, cultural differences that may be in place, and make it flexible. So alternative credit, we lean on that very heavily. I know, and it changes every time we work in different areas of Los Angeles. So I can imagine how for those lenders that are working throughout California, that may even be a larger feat. But we really try to disrupt. So what we try to do is take everything that we learn, inform our politicians and all of our other partners to make sure we change. Because one of the things that we think we've proven with our portfolio and would like to continue to prove is that micro entrepreneurs have the ability to repay, and we need to start including them in the system. Next slide. So I'll try to keep it short, just with our COVID response, but also thinking into one of the questions from our panelists. One of the other disruptive agenda items is really entrepreneurs, and very clearly same with COVID as well, is that they don't own where they're renting in most instances. So they are at a loss. So we did create a program. So it's community owned real estate, where we're giving the opportunity with a few of our other partners to introduce an opportunity for business owners to eventually own their own property. So we've purchased 5 commercial real estate locations eventually to transfer that ownership and give entrepreneurs an opportunity to own their future. But in order, and for COVID as well, and I'll leave it there, is we do have an emergency loan program. We've also, for the most of this year, we did a 10-month deferral, blanket deferral on our loan portfolio with an option for 2 months. And we've worked with the Los Angeles County to really assist in deploying emergency loans and emergency grants. And thank you all for listening.
Thank you, Maribel, and thank you for bringing in the word disruption and policy into the conversation. I hope we get to dig into that a little bit deeper. And I see Tate has a question for you, so maybe he'll get to ask that during the Q&A. With that, and there you see Maribel's contact information, and technology was giving us a little bit of a hard time. And maybe that's a lesson in how technology also, when we're relying on it for our entrepreneurs and our micro enterprises and small businesses, for a really, communities have been historically excluded. It can really be another barrier for inclusion and access to capital. So with that, I will go to our next slide and our next panelist, or we'll try to go to our next slide. Thank you, Adrienne, for getting us through these challenges. But we'll turn it over to Trevor. And Trevor is the founder of the Oakland Black Business Fund, and also has his own small business in Oakland, and so at Oakstop. So we look forward to hearing from Trevor, and I'll turn it over to you, Trevor.
Okay, great. Thank you, Paulina. So as Paulina mentioned, I am both the co-founder of the Oakland Black Business Fund and also the founder of Oakstop, which is a Black-owned and operated co-working space, meeting center, and event venue focused on securing and activating real estate for communities of color in downtown Oakland. Next slide, please. Okay, so Oakland Black Business Fund is an investment platform, meaning that we have multiple different ways in which we provide capital and resources to entrepreneurs that we support, with really the focus of improving neighborhoods overall, creating jobs, and building wealth, and really responding to what Paulina referenced earlier, which is anti-Blackness. We call it systemic racism, and I think that's sort of a larger catch-all, but given that we are a Black-led fund that is also focused on supporting Black entrepreneurs, we really are directly addressing the idea of anti-Blackness. Black businesses, Black communities have been barred from economic access and financial institutions for generations now. And so what we're really looking at is how can we help to sort of curb the impacts of that exclusion and begin to look at ways in which we can focus on sort of some self-determination to build up our own communities and have the resources to start to respond to and combat all the effects of systemic racism and anti-Blackness. So a lot of the different ways in which we work look at some of those core sort of foundational components. And really what we're looking at is both a lack of access to capital as well as a lack of control or access to real estate ownership. And as we know, real estate ownership is also sort of another way in which someone can build wealth. Next slide, please. So when we look at systemic racism, we define it really as this double threat that Black businesses are facing, particularly now after or sort of in the wake of COVID and the pandemic. We found that 41% of Black businesses have closed in between February and April, as compared to 22% of all small businesses nationally. So that's first one effect in terms of how Black businesses are impacted twice as much as others. And then similarly, 46% of white businesses were able to access lines of credit or capital within the past 5 years, compared to 23% of Black-owned businesses. So that's another doubling factor. So we call it a double threat because there's two sort of angles in which Black businesses are being barred. But then the interesting part of that is that the effects are also twice as large on Black businesses. Next slide, please. So this essentially explains our platform, and the goal for us really is to build an overall ecosystem that is geared towards the support of Black businesses, both in Oakland and across the country. And we have three basic phases. One is immediate, focused on COVID relief, but also just general relief from a lack of access to capital and anti-Blackness, as we call it. And that relief fund is focused purely on grants. We're not focused on capital being returned or regenerative. It's really to help build a movement within our community to say that people need to give to this fund to help Black businesses even get to a point where they're able to stand on the level playing field with other non-Black businesses. The second phase of that is focused on technical assistance, as some of our other speakers have referenced previously. Really, once they're actually on their feet, helping them get to the point where they can really be prepared for growth and scaling. And then the third phase is that growth and scaling, which is focused on now regenerative capital investments in these businesses, both in terms of their operating models, but also in terms of investing in real estate so they can own that real estate. And as was also referenced and asked earlier, a big part of the real estate piece is collective ownership. So we will both be focused on developing real estate that our Black businesses that we fund can occupy. So imagine an entire mixed-use development, inclusive of real estate and retail and office, and the companies then that occupy that development would also be able to either do some sort of lease-to-own option within their real estate arrangement, or they would be invited into some sort of JV collective ownership of that real estate when the development's being done. So that as the overall sort of ecosystem evolves and improves over time, the Black businesses are essentially building wealth from their own success. And again, when we look at how to combat anti-Blackness, we need to do it with the Black community. We need to make sure that we're not reaching outside of the Black community to try and find people to sort of swoop in and save us, but instead that we're actually building the capacity within our community to combat this. And that's really what the issue has been all along, is we simply haven't had the same resources and capacity that other non-Black communities have had, particularly white communities, to build this wealth. And when we want to go back to understanding why certain Black businesses are suffering, COVID unrelated, a lot of it is actually because, as many of us have heard, oftentimes non-Black and or white businesses, when they're starting, the capital that they receive oftentimes in the very beginning is from friends and family. And that friends and family capital essentially originates from the idea that their immediate circle, their immediate community already have the resources and wealth to be able to support those businesses. And that's essentially the loophole, how they get over that hump of being able to qualify for more institutional capital. And then of course, once they get that first start from friends and family money, when they're approaching institutional capital, the institutional capital is essentially already aware of that as well, and is then able to qualify and provide them with those loans that a lot of other Black businesses are barred from. So again, that's really how we're looking at this, is we have to focus on self-determination. We have to be cognizant of the fact that there has been an intentional effort to keep Black businesses and Black people out of this American dream. And so in order to do that, we need to then look at addressing those problems head on. So I'm going to dive a little bit deeper into the different components of our platform. When we look at our relief fund, that's what we've been focused on mostly in the last 6 to 8 months with the onset of COVID. And really the goal there is making sure that we can impact as many Black businesses as possible in Oakland with a target of 500 businesses and a $10 million relief fund, which averages out to about $20,000 of grant funds per business. However, there's some businesses, micro businesses, for instance, that we fund that, as Maribel referenced earlier, might only need $1,000. So if you can imagine then, when we're looking at those averages, some businesses might need 1,000, others might need 60,000. And through the grant funding, we're actually focused on providing that full range, really whatever the businesses need. And if they get one sort of disbursement of funding, they're welcome to come back for a second, and there's no regulations against that. Our application process is very smooth. We don't require a whole lot of qualifying documents that a lot of other funds might require. We really just require that the business outline who they are, what they're doing, why they feel that it's important for them to play a role as a Black business owner in their community, and then what they need. And from there, we just talk to them and go deeper into those needs. So that sort of segues into our second component. Technical assistance is oftentimes the underlying need for a lot of the businesses, and it may not necessarily be a matter of simply helping them with competence in terms of putting them on par with other non-Black businesses that maybe understand the rules of the game, but it's really just helping them afford anything that they might need that they would otherwise spend capital on. So when you can imagine if somebody's doing a capital request and they break it down into various line items, we look at those line items and we see how many of those line items that we could directly cover ourselves. But the catch here is that we focus on covering those line items through paid technical assistance from Black providers. The idea there is that we then keep the dollar in the Black community, number one. Number two, then it means that our funds are essentially a 2-for-1, and that we're serving 2 different Black businesses with those funds. But then number three, we're also helping to cultivate ongoing, lasting B2B relationships between Black businesses. So it's a play on acronym there, Black to Black or business to business, however you want to look at it. I'll wrap up now just by saying that the goal with our technical assistance is essentially to prepare those businesses for ongoing larger scale funding, either from our organization or from other philanthropic, government, or other funders.
Thank you so much, Trevor, for those insights. And so we're going to go to Ron next. And before I go to Ron, I'm not sure where the slideshow went, but I just want to remind our participants to ask any questions in the Q&A. There are a few there that we'll get to soon. And so please ask any questions there that you may have. Okay, and I will turn it over to Ron, but I hope, am I the only one that can't see the presentation, or do?
I'm not seeing it.
You're not seeing it, Adrian? We are having some technical difficulties. We need one of those old school like signs for the TV. There we go. All right. There you go, Ron. So remember to ask your questions in the Q&A. We're almost to that portion, and we've got some good ones in there. So Ron is the Executive Director of the API Small Business Program. And Ron, I'll hand it over to you.
Thanks. That's when I had short hair a year ago. Let's go to the next slide, please. I'm the Executive Director of the API Small Business Program, and what you are seeing for the first time for a lot of people is a little tweak we're making to our name and a new logo that we're rolling out. Because program, I've never cared for the word program. It's not a good descriptor of what we are. We are a collaborative, and what API SBC is about is we're a collaborative of 6 community-based organizations in Los Angeles County that serve primarily API communities. And those 6 are Little Tokyo Service Center, Koreatown Youth and Community Center, Search and Develop Filipino Americans, Thai Community Development Center, United Cambodian Community, and always Chinatown Service Center. So next slide, please. We strictly do technical assistance, and we strictly we work throughout LA County. And in fact, some of our work is taking us beyond the county and into the rest of the country. But primarily we're focusing on the Chinese, Cambodian, Filipino, Japanese, Korean, and Thai business communities in Los Angeles. And by being a collaborative of 6 organizations, we're large enough to handle providing service throughout the county, but at the same time, we're local. We have business counselors that are based in those communities that are bilingual or trilingual and can work with business owners in those communities. Next slide, please. So I'm gonna whip through really quickly on just the impact of the pandemic on AAPI small businesses. I don't actually see this a lot in a lot of the webinars that I go into, and so I'm happy to share this with you because I think you know, the more we understand what each of our communities is going through, the better we can be allies for one another. So next slide, please. So in the API communities, particularly among our Chinese businesses and communities that we're in, we've been feeling the impact of the COVID-19 pandemic longer than since March. For many of our communities, we've been feeling it since January, when we were starting to hear and see media reports coming out of China about what was happening there. And it's had a pretty significant impact on AAPI businesses, particularly in some cities where we're focused in, where we're seeing declines of 50 to 80% of business and up to 60% of businesses closing, at least temporarily. Next slide, please. McKinsey & Company report that a lot of AAPI businesses are in sectors that are most directly affected by the pandemic, and that is a combination of food services, retail, and then other services, personal services such as salons and laundry and stuff like that. 39% of all AAPI-owned businesses are in those industries per the US Census. Next slide, please. In addition to that, AAPI communities tend to be concentrated in MSA areas, mostly on the coast. Most of the ones that you are familiar with, the 5 largest are San Francisco Bay Area, Los Angeles, Long Beach, Anaheim, New York, New Jersey, Jersey City, Seattle, Tacoma, Bellevue, and Washington, Arlington, Alexandria, where 40% of AAPI businesses are owned in just those 5 MSAs. Next slide, please. You know, really unfortunate about this pandemic, and a source of real hurt within our communities is the huge growth in hate crimes. We have received over 2,500 reports, and that's as of August at the Stop Hate Crime Reporting Center. Polls out of Pew Research are showing you know, increases in people noting that it's more common for people to express racist views about Asian Americans, and we're certainly feeling it about as AAPIs, and we're certainly seeing huge increases in desires for and demand for mental services. We're seeing that across the board. So that's certainly doesn't help where your president is calling this the Chinese flu and blaming China for all that. And it just seems to be having just a terribly detrimental effect on our communities. Next slide, please. You know, this is something you all know. PPP has not been particularly effective in helping AAPI small businesses. As you know, for the initial rollout of it, PPI, you needed to have a relationship with lenders. And that was lacking with a lot of our folks. And as a result, unemployment rates have just boomed in our communities, 450% through June. And I think it's still just as bad through October. Next slide, please. And so, we've got a number of policy recommendations to make. We feel that there's got to be a greater effort from the federal government to provide relief, and they've got to do it in a way that is culturally competent, that provides language access to APIs. We feel that there just has to be a greater amount of appropriations. We think that protections need to be enhanced, particularly for consumers through the Consumer Financial Protection Bureau, and as well as through reinforcing the Community Reinvestment Act. Probably two of the most important things, two of the more critical things to our communities right now is we see that this pandemic is accelerating displacement in the communities that we're working in. And we are desperate to look at ways to tie relief to businesses that we feel are at risk of displacement, particularly micro businesses. And some of our partners are creating efforts within their own communities to try to address that. And the second item that's really important to us is data disaggregation. It is not so useful to us when we're all lumped in together as APIs. What Pew Research Center found is that among APIs, income inequality is growing at a greater rate than any other group in America. And there are great differences between, say, East Asians, Southeast Asians, South Asians. And so what we are hammering every public agency is to do a deeper dive into disaggregating data among APIs. And that's related to our huge support for Consumer Financial Protection Bureau to really start implementing Section 1071 of the Dodd-Frank Act so that we can collect better information about where small business loans are going to and who's not getting them. And so that we can then address those issues that I think we all have anecdotes about, but we lack kind of the data to better understand what's going on there. So those are a number of the policy recommendations that we're making. I think it is a great time and a very important time to dive deeper into advocacy. We're fortunate in that we're able to work with groups like CRC. We're also involved with the Association for Enterprise Opportunity in DC, which is a micro business association. And we're very active with the National Coalition for Asian Pacific American Community Development, National Capacity for short, or just Capacity. And so it's through these groups that we're hoping to have greater influence on providing greater relief for all of our small businesses in our communities. On a more local level, and I don't have a slide about this, we're launching an API SBP marketing initiative. We're going deep in helping small businesses, often our legacy businesses in our communities, to get up to speed on e-commerce, and many of them have. Now we're just trying to drive more attention to what they've done. And so we're going to be spending a considerable amount of time in trying to drive business, online business to those businesses. And that's one of our initiatives. Some of our local ones include a marketplace that Thai CDC has been in the process of launching that will serve as an incubator, and something that Madabel mentioned earlier that Little Tokyo Service Center is participating in, and that's their core project, the community-owned real estate initiative that they've been working on. So that's kind of a bit of everything that we're working on. That's just all wrapped up. So I'm all set. Thank you, everyone, and back to you, Paulina.
Thank you, Ron. And thank you to all our panelists for sharing their insights and all the work that they're doing. You all saw a poll that just popped up, and I thank all the panelists for raising, policy issues. And one of the things that we are working on now is, Ron mentioned the disaggregation of data. And, it's really important to have. One of our board members, Clarence Williams, likes to say, and it's always, he says this to me, he said this to me a few times, it always sticks with me, which is that data is policy. And right now banks don't have to collect or report data, but this is about to change on who they're lending to by race, ethnicity, and gender. But the Consumer Financial Protection Bureau is about to issue rules on that, and we want that data to be public. We want it to be detailed. We want it to have disaggregated data that Ron talked about. There's an opportunity to comment on that rule. I think my colleague Patty is going to put down in the chat a Google form that you can fill out to help advance the rulemaking on that and ensure that there's a strong data collection and that it's public so that all of us can have access to that data and then do the advocacy that we've just referenced. And so with that, I am going to turn to your questions and also ask the panelists some questions and hopefully engender some discussion here. And so we talked today a lot about, access to capital, the need, really for disruption in this space, the work that you all are doing to bring access to communities, the work of technical assistance and what that looks like, innovative products. And really this is about, impacting impact work in our communities that is trying to disrupt generations of redlining, disinvestment. We heard about displacement, predation practices. And I'm wondering if I just want to open up the space to talk more about what that looks like. We're talking about, generations of this kinds of disparities and practices, institutional, systemic, as we heard Trevor talk about, and what those impacts look like every day on the ground that you're trying to undo. So, if you can talk more about, what that looks like on the ground in terms of the institutional practices that you're trying to impact. So I just want to open that up for more detailed discussion around that, in the API community, in the Black community, the Latino community. If you can talk more about that redlining, disinvestment, and I know it looks different in rural parts of the state than it does in, Los Angeles or the Bay Area.
Yeah, so for us, in part, what it means is, one, there's often a challenge of, there's a challenge of access to capital in a literal sense. And again, when I speak about access to capital, I'm thinking about non-predatory oriented capital. But the availability of capital and because of the shift in how many financial institutions provide services to their customer base, with the exodus of business services and branches in a number of markets, from particularly rural, suburban, mid-size, urban markets, that then constrains the availability of resources, and also how those banks then invest into nonprofits and organizations that provide those services. And so while the businesses are already having, their various operational challenges, the organizations then that are working with them are also for that business to have access to those kind of services compounds those challenges. For many of those businesses. I would say one of the potential silver linings of very few in COVID-19 is it has forced many of our organizations to think differently about how we disperse and distribute technical assistance. And it creates some opportunities potentially for some of our rural businesses to access services that typically may have only been offered in an urban city. Yet and still, part of the challenge and the reality there is sufficient access to internet, quality internet, which are, of course, still challenges for many of our rural communities. But one of the things that I think it's where we're seeing is this desire from many of our technical assistance partners to really work with each other to leverage the resources that we have, kind of a little bit like what Maribel was saying, as far as thinking about how we deploy capital to leverage the network of CDFIs and responsible lenders to support businesses, and to do that likewise with the technical assistance that we're providing to them.
Thank you, Tate. I wonder if it makes me think, so the rural communities have specific challenges, but I also, I've sat down, I've been at tables with bankers who I've heard them say to me, things like, and I think about this, Maribel, because you talked about 700, credit score, right? That you have people coming to you with a 700 credit score. And I've been at a table with bankers and, where they have said to me, we just can't find people to lend to. We go to Latino communities, we have a bank in East LA, and there's just not, we can't find qualified people to lend to. And so I just want to open up this question, to you, Maribel, first, and maybe Trevor and Ron and others. What is your response to that when you have somebody coming into your your organization with a 700 credit score, and you have a banker who might be saying this on the other hand?
Yeah, I think there are other things that sometimes exclude them. So there does need to be some flexibility when we look at the applicant. So for example, their business may not have been formal for a long period of time. So we did have recently a bakery where they operated as a cottage business for a number of years. They opened up a bakery. There were other issues, but there are instances such as these where we overlook some of the informal work that they've done in the past. And then the others is sometimes, the applicants come to us because banks aren't there. I mean, as a result of redlining, I think you're surrounded by more predatory lenders than you are banks. So even in some instances where we ask clients to start formalizing and start documenting their business income and expenses, it's all in cash because there's no bank that's walking distance. And then my other one will be also, which is more of a suggestion, but also fees, making a system where I know sometimes the fees can get waived if there's direct deposits or if there's certain amount of money saved in the bank account. But for a lot of micro entrepreneurs, that's really hard. So why they have no incentive to open up a bank account and create that relationship with a bank, which some lenders also require. If it's hard for them to have a bank account that isn't hurting them financially, rather than assisting them and supporting them in their growth.
Thank you, Maribel. Trevor, Ron, is there anything you'd like to add?
Yeah. I mean, I was just going to say in terms of the statement that, banks are saying they can't find certain, qualifying businesses. I mean, I think that's the whole issue, right? Is that qualifications are all biased to begin with. So it's essentially this game that a lot of institutions play where they say they're open and they're inclusive so long as somebody meets these standards that are exclusive. So a lot of it is just rhetoric to say that we're open and we'll be willing to work with people. And then what happens when somebody with the 720 credit score comes along, they'll find something else to then say that they're not qualified. And I know that from firsthand experience. And so I think that when we look at these banks that are offering to do these things, I think a lot of it needs to be, how are you willing to change your qualifications, and can you actually show what that change is? Because you're dealing with a group that has been historically marginalized, and as a result, we need to rectify that piece, the qualifications piece, not the capital once it's in the bank. That's not justice. Justice is, we're going to change the way in which we qualify you to receive this capital in the first place. And it really needs to be a conversation that shifts from inclusion to reparations. And people don't necessarily want to hear that because it's just a large kind of tangled web that, you know, nobody necessarily has the skills or qualifications, if you will, to untangle. But ultimately, that's the message, is that it's a matter of economic justice. And when you want to translate economic justice to anti-Blackness, it directly translates to reparations. And so I think that's a big part of this, is that we need to find ways to work with banks and navigate those qualifications, but then we also need to look to other sources, because sometimes it's going to take Black businesses that have the 730 credit score getting funded, and then having a good sort of repayment history with another institution before banks realize they're actually missing out on business because they're excluded. And unfortunately, sometimes market forces are the only things that market players are going to understand. They're not necessarily going to understand the language of social justice.
Thank you, Trevor. Anybody else want to jump? Okay.
No, Pauline, just real quick, I would say,
yes, absolutely.
And Trevor, I appreciate everything that you're saying. One of the things that one of the options, and we do know, banks oftentimes have federal regulations that make certain things challenging, and that's a policy issue all to itself. But there are alternatives to that. I mean, and that's where, investments into CDFIs or CDCs or other entities that don't have those restrictions, that have developed underwriting and credit models that enable them to do that lending to what traditional banks say are riskier loans. But to the same statistics that Maribel was sharing about their loan portfolio, we've seen it similar. Majority of our businesses are people of color. They're from low-income communities, and their payment history has demonstrated that those two particular factors are not a set determinant on the ability of a business to be able to pay their loan. Many of those businesses, I was thinking about a business that we just funded earlier 2 weeks ago. And it was such an emotional response from the business. It was that sense of validation that someone sees the merit of my business, my qualifications, the skills and the services that I provide. And when we make those kinds of investments into the businesses, they majority, 98%, of them are paying back those loans. Even when they have closed the business or things have changed, they've made that commitment to pay. And so I think we have to collectively think differently about how we distribute capital within our country.
Thank you, Tate. Along those lines, we've seen, CDFIs begin to look at their underwriting practices and how to but really look at more flexible underwriting and to adjust their underwriting practices to begin to, serve more of the small businesses that have been historically excluded, and done some real, important work around that. And a lot of that has been, led by, some real groundbreaking CDFIs across the state. Tate, you've done that work, Mission Economic Development Agency in San Francisco, Inclusive Action. I'm wondering if you can speak to, and then, we heard about some of those products today from, the SEMIA Fund and, and then the Nano Loan product. And I'm wondering if you can speak to, what more can be done in that space. And then specifically, I think where the challenges come in is that a lot of the lending and investments that happen into CDFIs are coming from banks themselves. So that creates its own set of challenges and requirements on CDFIs. We're still working within the system that has these barriers within it and its own, historical practices that have excluded our communities. So I'm wondering if you can speak to those challenges, and what if you had banks in front of you and you could get them to do what you wanted, you know, what would that look like? And so just kind of open that up to anybody who wants to jump in there.
Well, I would say, yeah, there is this, you know, sometimes contradiction within the financial industry, financial institutions, that they want to see us do the micro lending and to do those loans, but then from an investment side, from a portfolio management side, the metrics that are used to evaluate our effectiveness are more traditional banking metrics. And so, you know, one of the things that we've been beginning to engage some of our investors about is, you know, do we have the flexibility to do the lending to have the kind of impacts that we believe that we need to have and that you say that we should have? And we are beginning to find some banking investors that are willing to allow us to have some of that flexibility. Some of that comes through traditional CDFI investments. Some of that comes through grant investments that allows us to pilot and gives us the flexibility to figure out what that underwriting metrics, that credit box, what it needs to look like, and developing that. And so with the development of the nano loan product, we were able to do that because of a grant investment through JP Morgan Chase Pro Neighborhoods that we probably wouldn't have taken with a traditional loan investment, but it gives us that flexibility. And so if, you know, as a part of that innovation strategy, and we see that in the, like from a private equity side, and investments, you know, investments are made into companies with not a guarantee that those funds are going to return to them, but they do it for the anticipated return, some kind of form or fashion from that company. And I think we need to be thinking about that same thing with CFIs and CDCs. If we're saying we want to have this kind of social justice, racial justice impact, then we need to have the flexibility to be able to do that.
Thank you, Tate. Anybody else want to jump in there?
Thank you, Tate. I mean, you nailed it. I do want to say, like, most of our debt capital is actually from philanthropy. I think it does add that flexibility. Banks do tend to support with our technical assistance, but it's something that I mean, it's on my priority for the top of the year next year. We give hours. Like this year, we did 1,800 hours worth of technical assistance. And, you know, what does that mean though? Like, we need to really look at, and I wish there was a way for us to really share the impact and have banks also want those intangibles. Like this last year, we had a small business, two of our clients, a brick and mortar and a street vendor, paired together to start distributing food, like emergency aid, just to their community, and hundreds of boxes of food. And that's not captured. But I think we need to figure out a way to, like, really look at the intangible impacts that we have on businesses, like really to look at, like, solving a lot of these inequities that exist. Because if those support systems aren't there, I think it's really important to highlight how businesses are working to support themselves, but we're not asked for that. And I think I don't know how, but I mean, hopefully there is a way in the future that all of our work, which, I mean, I know Ron, Tate, and Trevor here, we've done so much that isn't captured, even like in the technical assistance that we do, that we can't capture in just numbers. But that's a big task for all of us and for banks and institutions as they ask us for reports and numbers.
Thank you, Maribel. All right. Trevor or Ron, if not, I'm going to ask a question from the Q&A here.
Yeah, I'll just echo that,
Yeah.
that we also, for our fund, we did receive from a bank, we received grant funds. And that was actually, they were able to make that work because they made it part of their CRA work. And so I think that's another thing to consider is, you know, how can you help the banks navigate the structures that, you know, they also struggle with, right? It's not that the banks themselves are saying we really don't want to help people, but they're also bound to structures that may be exclusive. And so they were able to provide us with a grant and then actually have it matched by the National Community Investment Fund, and that all fell under their Community Reinvestment Act program, which normally is structured towards providing loans to small businesses, but they were able to do a grant to our fund, which was then going to go to small businesses. So, you know, I think that being able to get grant funds and being able to appeal to people's sort of greater sense of how to really push mission and justice and sort of a movement is a way to then be able to distribute funds in a way that doesn't have to then conform to other qualifications that don't serve the mission.
Thank you, Trevor. Ron, I see you unmuting.
Yeah, you know, I think part of what will help everybody here have more capital to lend is if, again, we can get 1071 implemented so that we have the data to show that banks aren't lending to people of color like they should be. And unless you have that club, you know, to hit people with, it's hard to really get people's attention. It was that kind of data that, you know, really made home lending much better, because it proved that we were redlining, or banks are redlining. And so we need that data to do that. And then we need a stronger Community Reinvestment Act to make sure that it happens.
Thank you, Ron. Thank you to Trevor and Ron for raising the Community Reinvestment Act. So we've been fighting a battle with the Trump administration, the Office of the Comptroller of the Currency, this kind of agency that nobody really knows about unless you're, you know, probably one of us, but they are the regulator, the bank regulator who regulates the biggest banks, and the Trump appointee there and the CRC nemesis has gutted the CRA and makes it so that banks could do less of what we're talking about here in terms of that kind of philanthropy. And so we are in a legal battle with them right now to try to undo some of that. And the Federal Reserve now has a rule that they're putting out that hopefully will be better, and they regulate some of the banks. And so if you want more information on how you can help support these efforts, you can email my colleague, Kay Stein at calreinvest.org. That's Kevin Stein, Kay Stein at calreinvest.org. And then the Google form is in the chat that you can become involved in what Ron's talking about here as well, which is that data that can be a real force to help keep these banks accountable around their lending practices. So there's a question in the Q&A here, and Leslie's asking about, we heard from several of our panelists about the importance of real estate ownership, that small businesses own the real estate themselves, and that it really helps with displacement and or anti-displacement, so that we are not then more vulnerable to being displaced from our communities, that these small businesses actually own real estate. And she's asking, or Leslie's asking about supporting worker-owned cooperatives, and I'm wondering if any of our panelists can speak to that, efforts to elaborate on ways in which your organizations or partners of your organizations are promoting the democratization of businesses you support. I strongly believe that worker ownership is crucial, not only for economic sustainability, but also to disrupt hierarchical systems and power imbalances that negatively affect workers, particularly BIPOC workers. And Leslie's speaking to actually the ownership, so cooperatives, right? And worker democratizing decision-making. And so I'm wondering if anybody here would like to speak to that in particular.
I'll take a stab. In my 11 years of running the API Small Business Program, I've had one client ask us about how as workers they could purchase the business that was being made available, and it's just not a common thing for people to know about, and there just is a lack of information all over. I mean, I don't know enough about it. My staff doesn't know enough about it, and so as we're seeing more businesses close and as we see them being replaced by chains, particularly in these communities that we work in, we've got to look at other ways to provide community control of businesses. And if we can't control the land, we've got to control the businesses. And so I'm making a point of upping our knowledge on this and being able to talk to people about this as an idea and at least planting the seed. I think besides just knowing the nuts and bolts about it, I think we could probably use someone with good community organizing skills to really try to put that out there. And that's, we're not there yet, but I am promising that we will be.
Thank you, Ron. Trevor,
Yeah,
are you on mute?
I agree with that. I think there needs to be more information out there for the business owners. The other thing, though, is frankly that's another layer of management administration that a small business owner has to metabolize, and that can sometimes be tricky. A lot of the businesses that we deal with are not even able to prepare for, say, like an equity investment, simply because, again, that's another layer of sort of administrative overhead that they just aren't in a position, not because they can't or aren't educated to, but it's just there's already a lot to do just in keeping a small business running to then do that other piece. So that being said, I think that there's other ways to sort of get to the same goal, or at least a similar goal. And one I know that's a lot simpler is doing profit sharing. And so you don't necessarily have a collective ownership structure, which also then can create other tax implications, which may create complications either on the side of the business or the employee once you start making everybody an owner of something. And that also, as we know, can affect ability for the business to raise capital then, if now multiple people need to be submitting their documentation as capital is being raised. But if you do a profit share, the employees still have a vested interest in the success of the business. They still share in the economics of it. And I think even as a lender or a funder, it may be easier to incentivize the business owner to set that up. Perhaps something as simple as, the lender saying, will somehow reduce your interest rates or something like that, give you a longer term, whatever. If you're then able to pass that on, essentially that savings onto your businesses in the form, or your employees rather, in the form of a profit share. So I don't know, so it's just sort of a stab at it, but I think I'm echoing Ron saying that there's both lack of information, but also if we have the information, I know myself as a small business owner, it just takes a lot then to go through all that and then make it work for your employees if they're not all already prepared for that kind of arrangement.
Thank you, Trevor. So I wanted to ask a question of Maribel. There seems to be interest in the alternative credit that you mentioned earlier. Can you speak a little about that?
Sorry, my internet connection is a little unstable, so I turned off my video.
No
Could
worries.
you repeat the last part?
Oh, the alternative credit that you spoke to earlier. There's a question in here, if you could speak more to that, and an interest in learning more about that. If you could speak more about that and how you use alternative credit.
Yes. So as it's not shocking. So most folks just, when they come with an application, they don't have what most lenders would ask for. So especially credit, I think I'd have to look to see if that is still the case, but the last time we went through credit scores, the majority of our clients had under 600, if they even had credit at all. In a lot of cases, we just had a credit report that said insufficient credit. So we rely pretty heavily on alternative data. So that includes, very often we ask for tenant logs. And if they don't have that, sometimes it's just a letter from an owner. It says they're paying timely, they've been there for X amount of years. Utility bills, in some cases, the odd one that we have, sadly, that we have used is if there has been a predatory loan, they print out the statement that they've been making those payments. And it also for us is a learning opportunity, or an opportunity to teach and really show how much those loans can cost. But we use what they have. So that also for us it means looking at their expenses as they collect their receipts, looking to see what the business financials look like and helping them to rebuild them for at least the year. And it is pretty time intensive. So one of the things that I think happens through our underwriting process, and in trying to create like an alternative credit score, which for us is like a range from like 1 to 5, is really spending the time to recreate all of those financials and create a picture of what the individual's finances look throughout the year, to make sure if they take on a loan, it's an amount that doesn't stress them, that they can easily take on and repay and plan for and project a growth. So that I think is what makes our process a little bit unique, but also, yeah, very, very time intensive.
Thank you, Maribel. There's a question here from Angie, who's asking about childcare small businesses, that they're predominantly run by women of color, and that LIF is administering the City of LA CARES Act grants to over 700 providers this month. They are frontline workers supporting frontline workers. To what extent have your organizations worked with this sector, and what type of support would be helpful to better serve the childcare small businesses? I'm wondering if any of your organizations have worked with these small businesses, and if you have any insight that you could share.
I'll jump in again. Just as a small business technical assistance provider, we get calls every now and then from home care, child care providers that are doing this at home, and it's everything from how do I apply for a grant, or how do I get a loan, to what do I need to make my business more formal, I suppose. And so it's a whole range of things that we've worked. A whole range of issues that we've worked on with child care providers. We're not a lender, so we haven't actually provided them with capital, but we at least will tell them that there are some great ones out there, like Inclusive, like CDC Small Business Finance, like Jewish Free Loan Association, and others. So there's options that we can help them with.
Thank you. Any other final thoughts on that, Tate?
I was going to say, yes, in the past, we have funded child care providers, either in-home or small centers. We haven't developed a specific strategy for child care providers during COVID. And so I'm actually very interested to learn more about that particular program. But just, supporting our borrowers during the pandemic is, providing flexible structures around their payments, looking at deferments, and then coupling that with technical assistance on strategies around recovery. Of course, that's been very challenging, kind of as the state of California is, opened and closed several times. And so we just continue to try to be flexible, and our communication with our investors, they've also been flexible with us. So that twofold component of been able to have conversations with our borrowers, but also conversations with our investors. So we have that flexibility.
Thank you, Tate. I'm going to ask one last question, and then we're going to wrap up. We've heard a lot about the PPP loan program and what it takes to really support the small businesses that you're all working with, and specifically those that have been excluded from these programs, and even the grant programs that have been put out by the local municipalities, and the kind of technical assistance it takes. The governor just announced a $500 million grant program for the state of California small businesses. And just pretend, well, don't pretend, I'm going to send him this video afterwards, Governor Newsom. I want to tell him what that grant program needs to look like to really get to the small businesses that have not had access to the PPP loan program, that have not had access to any kind of bank lending, and that have really missed out on the grant programs that have been out there so far. What would you tell them that grant program needs to look like in order to really be impactful?
I'm full of ideas on this one. Like Inclusive, we worked with LISC and the County and City of Los Angeles in their $100 million relief fund, which provided grants from $5,000 to $25,000 to not just small businesses, but 1099 workers, gig workers, and all. I'd say one thing, I think we need to narrow down the eligibility to really businesses in need, and I would err more towards micro businesses than small. And then secondly, a great thing that listed is that they hired folks like us and Inclusive to reach communities that would not have otherwise heard about this. And we, Maribel and my staff can go on for days about how much time it took to work with people in language remotely to do things like create an email address, to learn how to scan your tax returns, how to upload that into a portal. I mean, time consuming, but that's the thing that's needed. They need to bring on folks that can reach these communities and work with them so that they have access to these resources.
Thank you, Ron. Trevor.
Yeah, I'll echo Ron's comments as well. We had similar conversations with City of Oakland around CARES Act funding, and the whole idea was how can we get these larger government funds into community-based funding organizations who really can get down on the ground with those different businesses, and number one, make sure that they get their applications in, but number two, make sure they're actually reaching everyone. And I think that that's, as we always hear, people just don't know where to find the businesses. So here's an answer for how to find the businesses. Work with smaller community-based organizations that are doing funding, maybe even those that are not necessarily already set up doing funding, but are actually very much embedded in the community. For instance, like my other business, which is a Black-owned co-working space, we're connected to several businesses. But the point is that if you continue to work with the same relationships that you've been working with, we're going to get the same results. And that's just a very basic sort of logical principle. So you have to do something different if you want different results.
Thanks, Trevor.
Yes, and I would just I agree with the comments that have been stated from our own experience working here in the Central Valley, and then working with a coalition that's forming the California Small Business Coalition for Racial Justice. Just in agreement of the need to make sure that there's a good application experience, that folks have access to the program in language, that we're leveraging local resources to provide the technical assistance and support that's necessary, and that we're thinking about who we are prioritizing in that selection process. It shouldn't just be a first come first serve. But also, emphasizing the need to prioritize businesses that are smaller, but also probably did not have access to PPP. In particular, also businesses of color and those in low-income neighborhoods. And so, I think there's an opportunity for the state to demonstrate this leadership and what we do here in California that hopefully may even influence. Some various next round of probably various rounds of federal assistance that will happen in 2021 and beyond.
Thank you, Tate. Maribel, you get the last word.
I think it should be a long process where we really dedicate some time to outreach to make sure we really target the individuals that need it the most. They should be clear about the requirements and have flexibility systems for being flexible in place. And I mean, besides being in language, I think one of the biggest hurdles for us in providing support has been the digital divide. Very early on, which shocked me, and I kept hearing like individuals say, I can't apply because I don't have a computer, I don't have reliable internet access, or I have an Obama phone, which I had to even figure out that some people don't even have smartphone capabilities on their phone. So I think if we really want to make sure we target all individuals in need, which includes micro entrepreneurs that have been severely impacted, we really need to outreach properly and create opportunities to submit documentation or verification in a way that isn't solely digitally. And maybe one more thing is also with a few other programs, like making sure there's someone available to take the calls. I know definitely through EDD as an example, like through the pandemic unemployment assistance and even in the disaster relief programs, it was really difficult to get through just to a human being to get questions answered. So one of the things that LISC did do was partner with technical assistance providers and expanded their capacity. So really thinking about what our capacity to, or the organization that gets this project, making sure they build that so they can assist and make sure the information gets disseminated properly.
Thank you, Maribel. And thank you to all our panelists, Maribel, Tate, Ron, and Trevor, to the CRC staff for helping us put this together, and to all our attendees today for joining us this afternoon. We'll be sending out the slides and the recordings from today, and I'll make sure that Governor Newsom gets a copy. So thank you again, and have a wonderful afternoon, and please be safe, everybody.